when you're right on a contrarian bet, you tend to make a lot more money than you do if you follow the herd and you buy the Mag 7 when everybody else is buying the Mag 7. But if you want to buy something that is out of favor or underfollowed, you have the opportunity to make exponentially more money, typically, if you're right. We were ready. We were for this kind of breakout opportunity, and we hadn't seen anything like it. 65 million or so of cash on our balance sheet. We took most of that cash and bought Bitcoin. We actually bought into the Google IPO around 15 times earnings for a company that was growing hypergrowth. I think the banks are going to get into this soon. I mean, it was a good sign that Morgan Stanley did Saylor's last, deal. That's a sign that, big time banks are going to get into this.
All right, Eric Semler, thank you very much for joining the Bitcoin News YouTube channel. Interviewing you today as you are one of the world's largest corporate Bitcoin holders. An absolutely amazing feat that will most likely go down in history. But before we dive into that, I want to talk to you about your investing history. You've been investing professionally for over 20 years, and you often say you consider yourself a contrarian investor. So let's go into that mindset. What makes one a contrarian investor?
That's a great question. It's great to be here. Thanks for having me. I'd say that being a contrarian investor is just this. It's in your DNA. It's kind of something you're born with. I think that's kind of just the way that I am chemically set up to be contrarian. I like to say it's because I'm from Oregon, where you have a lot of contrarians growing up in Oregon. You just look at the world a little differently, and I think that's part of it for me. But I come from a family of entrepreneurs who were always trying to create things that weren't there, and maybe that's part of it too. But being a contrarian in the stock market is a really interesting place to be. It's challenging because you tend to like things that other people don't like, and so you're often what I would say is a lone voice crying in the wilderness. Vox clamantis in deserto, in Latin, which is the motto of Dartmouth College, which is my alma mater. And maybe that had something to do with it too. But I always loved that concept. And the part of it is just in terms of making money. When you're right on a contrarian bet, you tend to make a lot more money than you do if you follow the herd and you buy the Mag 7 when everybody else is buying the Mag 7. But if you want to buy something that is out of favor or underfollowed, you have the opportunity to make exponentially more money, typically, if you're right. But a lot of times you aren't right because, the herd is often, they've done a lot of research. You're outnumbered, and maybe they know something. Maybe they're right because there's just so many of them digging into it. And sometimes it's a self-fulfilling prophecy, right? They just kind of create this negativity around something, and it ends up just, being self-fulfilling. But generally, I think being a contrarian is attractive because it allows you to make exponentially much higher returns.
Yeah. And I mean, I think a lot of Bitcoiners fall into that bucket, right? We probably wouldn't be here at this point unless we were contrarian thinkers. Looking over those last 20 years of investing, can you give us some examples of being right in being a contrarian?
Sure. A great example really was the Google IPO. I think it was in 2004 in August. Google was a very unknown company. They had a new business model for monetizing search, and people thought they were weird because they had this manifesto, and they didn't do your traditional IPO. They did a Dutch auction IPO. They didn't really do the conventional roadshow, and so people thought they were strange and weird, and were kind of turned off by this iconoclastic management team. And also no one really understood the potential of the numbers because at that point, the numbers hadn't really shown themselves. It was really just more of a, they had this unique algorithm that was attracting a lot of attention, maybe the way DeepSeek is now today, but it hadn't been fully monetized. So it wasn't clear how much money they were going to make. And so there were a lot of people who were pretty negative on Google. They didn't like the way they were conducting the IPO. And so there wasn't a lot of interest. I also think it was just a tough time in the market. And so there just wasn't much demand. And on these IPOs in those days, and it's probably a bit true today too, you would always, if you were interested in being in a deal, in an IPO, you'd often put in, an order much higher than you wanted it to be because you expect it to get cut back. Oftentimes these deals are oversubscribed. And so if you put in for $100, oftentimes you get 25 or 50 in a hot deal. And so, I was very excited about it. I thought Google would do $3 a share in earnings. They were pricing the deal, like I think in the 90s, maybe over 100. It started like at 150, I think, and then there wasn't enough demand, so they eventually priced it in the 90s. And I think when it opened, it went down below 90 and was really scary. But the crazy thing is, Morgan Stanley that was running the deal, they called me that morning before the IPO started trading, and they said, "Eric, you've got your full allocation." And I think I put in, some crazy number, and that never had happened to me. It probably happened to me a few times, but not like that. And so, the size of it was like such a massive position in my fund. We were running a $4 billion fund, around $4 billion at that time, maybe a little less than that at that time. And it was just a massive percentage. And so I'm like, oh God, I guess I don't have a choice, right? I put in for the order, and then the stock opened up, I believe, up in the mid 90s, went down. I can't remember exactly, but it went down. And I was shaking in my boots. And then from there, it was just pure glory. I mean, we held on to it. Stock did amazing. We did have to sell some because it did become too big a position in our portfolio. But it was great. And that $3 a share in earnings that we thought it would do, which kind of valued it at 30 times earnings, it was growing super fast, ended up being $6 a share. So we actually bought into the Google IPO around 15 times earnings for a company that was growing, just hyper growth. And so that's a good example of something where you just believe in it. You don't really care what the rest of the crowd is doing. And sometimes you get more than you expect, and it ends up, being a huge winner for you. And that helped me as a fund manager differentiate my performance and my fund from other funds, which enabled us to raise, a lot of money because people were like, wow, these guys are doing something different. No, not a lot of people were in the Google IPO making that kind of return. Another example would be Netflix. Netflix, I could talk about all day, but it's really early in Netflix. At one point, TCS, my fund, we were the largest institutional shareholder of Netflix, and it was a hated stock. People thought they had no future. It was first about Blockbuster. Blockbuster was going to kill them. Then Walmart was going to kill them. And then when they went into streaming, most people thought it would be a commodity, and they struggled initially with streaming, and then eventually it worked out really well. But that was like owning a wall of worry, owning Netflix stock, and I got very close to management there, and became, that helped me a lot because I became very comfortable with management, very impressed. And at the end of the day, I think it was management that enabled that stock to be so successful. They were just a dynamic, visionary team that just could see so much further out than any other media company. And, look where they are today. They're dominant. And it's actually a fantastic story still today, but now it's not a contrarian idea. It's a very mainstream idea.
Wow, that's amazing. You're early in Google, early in Netflix. That's quite the history. And so if you're talking to a younger investor, right, who wants to be contrarian, who wants to make these home run bets, it takes a certain kind of mindset, right? You need to be able to, as you say, envision a world that's not made yet. And so do you have any mental practices or things you do outside of investing to help expand that imagination, you would say, that help you see these opportunities?
I think you rely a lot on patterns in your life and things that you've seen in the past. For me, it was with stocks so much, or just with, the way the world's developed. There's this pattern recognition. It's harder when you're younger because you don't have as much experience in history. So it's a little bit of a baptism by fire, which is tricky. But you over time, you see these patterns, you see kind of that S curve developing, and you're wrong a lot, but you have to make those judgments. And I tend to look for those S curves, and that the early stages of that's where it's tricky, right? Things flatline for a while, they bump along, you're not sure if they're really gonna, take off, and you kind of make that bet. And I think another important factor in doing this is these types of bets, these contrarian ideas tend to be super volatile, like Bitcoin. And so you can't bet the ranch. You have to be measured and reasonable about how much you're willing to invest, and be disciplined about it as a percentage, because it's going to move your portfolio a lot, and it can also kind of mess with you emotionally. You become obsessed with it. It's hard to part with, and it kind of consumes you. And you're much better off making that a smaller position. And given the upside that you believe it has, you don't need to make it supersized. But it is a bit of a trial by fire. I think for me, my background is as a journalist before I got into investing. So I had this kind of mentality of just pounding the pavement, trying to get as much information about something as I can, just go deep, interview competitors. Competitors are always like the best people to talk to, because they're going to give you the ultra bear case, and you have to decide whether there's validity in that. But you just really have to be a journalist. You have to be an investigative journalist and just do everything you can. And you have to stay somewhat callous. Like, you have to not get too attached, even though you may love this concept called Bitcoin or Netflix or Google. You still have to be a journalist. You have to stay objective. And it's really hard to do that when you really like something and you own it and you want it to go up, and you just, you become obsessed with it. You have to find a way to stay agnostic and remind yourself, I'm an investigative journalist and I can be wrong. And you have to always question yourself and challenge your convictions.
Yeah, you need to be curious, right? If you're not curious, you'll get stagnant and you'll lose track of it all. So yes, now I'd like to transition into your Bitcoin journey. I've done my homework as a journalist, and I know that you were first introduced in 2013 by Wences Casares in Palo Alto, right? But you didn't get into it. And then in 2017, Tom Lee of Fundstrat is the guy who made you finally dive in. So in terms of Bitcoin, did your fundamental economic beliefs line up with it when you first got into it, or did you lean more into the Austrian School of Economics after studying Bitcoin?
Neither. I would say that I was very skeptical, and I tend to be very skeptical of things that are not very well proven. And I want to see cash flow and evaluation and a multiple. And that's how I'm programmed. And so it was not intuitive to me whatsoever. I also, I'm not a macro investor. I'm an individual stock investor. I invest in technology and media on a very micro basis. So it was really a foreign concept to me. The thing that appealed to me about it was just that it had this potential massive TAM, or total addressable market, that was really interesting and exciting. But I didn't see enough proof that it would be adopted. I'm not that early stage an investor. I need a little more meat on the bone. Mm-hmm. So it took me a while to really get highly convicted. I would say that it's really more recent for me where the high conviction has set in, and that's really from the institutionalization. I know I sound like a late comer to the story, but institutionalization for me was really the clincher that it's happening. It's obviously accelerating with the Trump administration and the ETFs and all the buying you're seeing from institutions. That's huge for me, because that kind of convinces me that it should surpass the value of gold, which is just tremendous upside. And so that's kind of how, where my conviction lies.
So you bought it first for yourself in 2017, but then, of course, there's Semler Scientific, right? A company that you got involved with as an activist investor, and you realized that the company needed something, right? So let's talk about that. What was the aha moment that Bitcoin needed to be put onto your balance sheet?
The aha moment was when we couldn't find anything else to do with our cash. And there was Michael Saylor out there calling companies like our zombie companies, sitting on a lot of cash, making cash, generating cash, and not knowing how to get a return out of it, not getting any credit from capital markets for it. We had almost half of our market value in cash, and no one really cared. And did we want to buy back our stock? No. Did we want to do an acquisition? After a lot of work, we couldn't find one that made any sense. Bitcoin seemed like a really smart investment at that point, just given this institutionalization wave. And so I took it to the board, my fellow board members, and after some debate, we agreed that it was the best use of our cash. And that's kind of how we came around to it.
And you said that Saylor actually picked up the phone and talked to you about this before it got started. So what were those initial conversations with Saylor like? Because nobody else had followed him up until this point, right?
Yeah, I had never met him, and I was amazed by how responsive he was immediately. Like just through Tom Lee, I reached out to him, and he was just immediately responsive and so caring and generous with his time, and really could tell really wanted us to succeed, and was just a great supporter, a great mentor, frankly. And he's always there for you. Like he's just a guy that cares so much, obviously, about the cause and has so much insight into this in such a short period of time. I mean, he's only been doing this for 4 or 5 years, and it's amazing how well he articulates the story and how he continually kind of takes it to the next level, and his ability to just cut to the chase. I mean, he is amazing that way. When I love to bounce ideas off him. He's just an incredible sounding board. And he is just so right on the point all the time. Like he just gets it. He's like, he just knows how to, think in your shoes, essentially. And he just puts yourself in your shoes and figures it out, instantly. He's just such a bright guy. And I know that, like, it's funny because, once you become a fan of Saylor's, you just can't stop talking about what a great guy he is and how amazing he is and all this stuff he's doing. And it's just amazing that there's this one guy who who dominates the dialogue and keeps pushing the ball forward. And, I wish there were more people like him, but he's just, one of a kind. And I kind of keep slapping myself and say, God, you got to stop like kissing his ass. Everybody's kissing Saylor's ass. And it gets kind of like, it starts to sound a little too like, brown nosy, but you can't avoid it. The guy is just like, he's a rock star, and he is so valuable and influential, and you got to just be grateful.
Yeah, I mean, it's not just the metaphors, but it's also the fact that he's putting his money where his mouth is, right? He's put it all on the line, and if this doesn't work out, then it will be one of the most spectacular failures in financial history. But so far, so good, right? So, when you were talking to the board initially, I'm sure there was some questions. There had to be some pushback. What were the most common inquiries they had? Like, why are we doing this?
That's a great question. I hate to get into kind of the nitty gritty of it, but I would have to say overall, our board was not like that. Our board was pretty quick to get it and was all in. We had been really anxious to find some type of opportunity to jumpstart our growth, and we had this cash, and it was gnawing at us. Like we were just spending so much time meeting private companies and talking to them about buying them. And it was just every negotiation just didn't feel right. And it was just kind of like these guys are asking for too much money, or, it's hard. It was a black box. You don't know where it's going. So we were ready. We were for this kind of breakout opportunity, and we hadn't seen anything like it. And it just made so much sense. It obviously helped so much to see how much success Strategy was having with their Bitcoin Treasury strategy. And again, not just me, but I think our board as a whole, we're interested in, we're all contrarians, and we're interested in trying to be innovative. And we're open to concepts like Bitcoin because we want to be open-minded. We want to be entrepreneurial. And I think that it clicked with our group because of that, because of our DNA as a board with this desire to kind of think outside the box.
Mm-hmm. And it's funny that it was just 1 year ago that you got the green light to go ahead and do this, right?
Not even a year. It's been about 10 months. Yeah.
And it's just funny. We were in a completely different world in terms of regulatory environment under the Biden regime. So talk to us about those initial talks with the SEC and what you had to go through to actually make it a reality.
It was incredibly frustrating. It was hard. We lost a lot of time going back and forth with the SEC. This would be good advice to others, but it's not as big an issue then. But I wish we had, for instance, set up our ATM before announcing our Bitcoin Treasury strategy. But we should have had an ATM in place already, just like a lot of companies do. But because we announced Bitcoin Treasury strategy and then, filed with the SEC, they scrutinized it more because we, announced that we wanted to buy Bitcoin with our ATM. And so if Bitcoin had not been in the picture, we probably could have moved quicker to buy Bitcoin and to establish, that ATM process. So the SEC was definitely a roadblock. They were constantly, going back and forth with us with rounds of questions. I think they were all about Bitcoin, if not, mostly about Bitcoin. And they were just there were no like really difficult hurdles. It was just a lot of process and red tape, and they really strung it out on us, and it was really cost us a lot of time. So that process was frustrating. I'm hopeful that companies today don't have to go through that.
And so, how much time would you say that was lost due to just
probably 3 months?
Yeah,
I'm guessing. Something like that. There are a lot of there's a lot of administrative stuff you have to set up, but that wouldn't have taken more than a few weeks probably, with lawyers and accountants and things like that. But I think it's got to be different today. I think companies trying to do this, are not going to face the same hurdles that we've faced. And I think just generally being a public company in the United States, you have blackout periods, you have earnings, blackouts and things like that. It makes it a little bit harder, especially when you have an operating business to find those windows where you can get in there and, use your ATM or whatever it is, do an offering to raise money to buy Bitcoin. So it's not as, it seems like you have all this time to go do it and you should be in there every day. But for us, it hasn't been as kind of open and free to do that. And I wish we had more windows where we could buy more. I'd like to own a hell of a lot more Bitcoin than we own right now, which it isn't enough. So
isn't enough. It's you have half as much as the country of El Salvador, sir. You got
love it. We got to beat El Salvador. We got to get El Salvador.
It's a crazy time we live in. Absolutely.
Yeah.
I mean, we're just at the beginning of this race. And so let's talk about buying Bitcoin from a corporate lens, right? So you can do it with your cash flow. You can sell equity to buy more Bitcoin. You can offer convertible debt. And so I think that now Saylor is offering perpetual stock and whatnot. So, I mean, I think it starts to get confusing to the layman after a while with all these new financial products coming out, especially pioneered by Strategy to go out and do this. So just if you could just lay it out in simple terms, the different ways of buying Bitcoin, the difference between, say, convertible debt and offering equity, and all these different ways of acquiring more for your balance sheet.
Sure. So the best way to buy Bitcoin is with your cash flow. So you generate cash and you take the cash that you generate and you buy Bitcoin. Not all of your cash, because you need some for working capital. But and we started out that way. So we had 65 million or so of cash on our balance sheet. We took all of that, most of that cash, and bought Bitcoin initially. Then we would, buy Bitcoin as we generate more cash flow each quarter. We use most of that cash flow to buy Bitcoin. So that's the best place to start. And that's where you get the highest Bitcoin yield. That's where you get the most Bitcoin per share when you don't have to dilute the stock. You don't have to actually, do things that are going to increase your shares, and a share calculation. Like a convert, even though convert's mostly debt, it can increase your share count when you calculate Bitcoin yield. Anyway, best thing to do is just buy Bitcoin with your cash or with cash you're generating. The second thing to do is to use debt to buy Bitcoin. I believe, if you're not a levered business, because that's less dilutive than issuing stock. You're taking less of a hit to your. It's more accretive. That's the best way to put it. And so we did that. We did a $100 million convertible offering, and now we're the most levered equity play on Bitcoin in the stock market, I believe, as a result of that. We've also bought Bitcoin with our ATM, which is just a mechanism for selling shares in the market and taking the proceeds of those share sales to buy Bitcoin. And that's the most dilutive of those three options to the shareholders. But it's also been also a good generator of Bitcoin yield because we're selling shares and buying Bitcoin, which is growing much faster, than our share count, and is hopefully over time going to produce huge accretive upside for our stock. So we in our last quarter we announced very large gains in from our Bitcoin purchases, and so that's kind of the goal is to find ways to either through operating cash flow, through debt, or through ATM sales to buy Bitcoin, because we believe that all of those, in most cases, all of those mechanisms are very accretive to our shareholders and will hopefully increase our share price a lot over time.
And so a big metric right now is BTC Yield, the increase of Bitcoin on the balance sheet per share of your company. Can you talk about BTC Yield for Semler?
Sure. I mean, our BTC Yield, I think, has been something like 150% since we started. It's really just in simple terms, it just kind of indicates how much Bitcoin you're adding to your balance sheet in an accretive way, in a way that is going to create value for your shareholders. And that is a kind of a big picture way to look at it. It's essentially, buying Bitcoin in such a way that your purchases are increasing much more than your share count. Mm-hmm. And that's what we're doing. And it's I think every time we've bought Bitcoin, we've announced very significant Bitcoin yield. Mm-hmm. But the main point is that we're over time trying to become a Bitcoin company. So we want to drive our performance, our stock performance through Bitcoin. And so the more Bitcoin we can purchase, the better off our shareholders will be, including myself. I'm a large shareholder of the company, and that's how we think about it.
And so you've said that you think your stock is attractive because you have a two-prong approach, right? You have a medical business as well as the Bitcoin business. Do you see that the Bitcoin side of the business taking over a larger share of the purpose behind your company over time, or will you always maintain those two?
Yeah, I do. I think what I'd be happy to talk about our medical business more specifically, but I do believe that we have opportunities in our medical business to create cash flow to buy Bitcoin in a creative way. So I just think that over time, we're going to own so much Bitcoin. Right now, we own almost 3,200 Bitcoin, or a little under $300 million of Bitcoin. That it kind of dwarfs our medical business already, but it if our medical business can generate cash flow, then it's just going to help our make more accretive purchases, less dilutive purchases of Bitcoin. So we want our medical business to do that. The medical business has traditionally been a big cash flow generator, so that's worked. And the beauty of the medical business is that it's capital light. It doesn't require a lot of investment. And so it's a nice complement to the Bitcoin strategy because it has very high margins, very profitable, and can generate cash flow that just feeds the flywheel of buying more Bitcoin. But over time, it's just not, if you look at it historically, it wouldn't be big enough to really make a huge dent in our Bitcoin buying, because it's limited. Once you get up to several $100 million of Bitcoin, it's not going to be able to drive huge purchases of Bitcoin.
Mm-hmm. And just while we're still at the Bitcoin financing section, you are the most levered play in terms of Bitcoin stocks, right? Can you talk about the mindset for that, the guts it takes to be that position?
Takes a lot of guts. It really does, because debt can kill you, and so I'm very mindful of that. I don't just buy stocks; I short stocks. I often short stocks with a lot of debt, and think a lot about their ability to pay off their debt and their ability to survive, for their equity to have value, given all the debt they have. So I'm very cognizant of what debt can do to equity in a negative way. But I also think there's the beauty of finance is that, using leverage, you can get much higher returns. And, so that's how I'm thinking about it. I just think that by putting on reasonable leverage, which I think we have, I don't think we're overly levered. I think that we will be able to generate much higher returns as a result of that by buying Bitcoin with leverage. And it also, there's this huge debate about MNAV and what's the right premium that we should trade at to our Bitcoin. And I think that's a great debate. And I think that that we should trade it if Bitcoin's going up and we're creating all this value through leverage, that we should trade at a premium to our Bitcoin holdings, or we should go up more than other equities that aren't leveraged to Bitcoin, so that I think works in our favor. It's just that you have to have this view that Bitcoin's going higher. If you're a bear on Bitcoin and you think it's going to 40,000 or whatever, then you should short our stock, because, it will suffer for that. But our debt is not short term, and it's not, it's not vulnerable at all to like a put or any kind of margin call. Our debt is 5.5-year debt. It's not due, I believe, until sometime in 2030. So we have a lot of time to benefit from that leverage and the benefit from the rise in Bitcoin. I think Bitcoin is going significantly higher, and so our stock should go higher than just owning, the ETF, because we have this leverage. And also, even though that you hear about like lots of companies buying Bitcoin on their balance sheet, I don't really see that. Like, I know they're probably out there but there's not anything really yet I've seen of scale other than Metaplanet and us, in terms of real scale and obviously strategy. They're in a different stratosphere, but among newcomers to the Bitcoin Treasury. And I'm sure there will be. I'm not trying to, say we're the only two, but I think that we have a lead, and we'll probably, build on that lead, consistently. So I think that scarcity value of being one of the few stocks with any scale in Bitcoin on their balance sheet is also maybe a reason why we should trade at a premium. A lot of funds, I think people know this, but a lot of mutual funds can't buy Bitcoin outright. They can't own the ETFs. They can only own stocks. So, there's a scarcity value to our equity.
Mm-hmm. And so adding the leverage, adding Bitcoin on the balance sheet, it makes you guys volatile, right? Do you see that as a benefit to your shareholders or to the market in general? How do you look at volatility and your stock at this time?
It's a great question. I think I think our shareholder base is made up mostly of people that have high conviction in Bitcoin, and I think that they understand volatility really well, and they have amazing ability to kind of stomach volatility, and so in that way, I don't worry about it so much, and I think that a lot of our shareholders are happy that we did the convertible offering and are wanted to see us take on leverage to buy more Bitcoin. So I feel like we're aligned that way. And I don't think people that will own our stock are generally expecting it to be a smooth, non-volatile experience. I think they expect that volatility. And I think that, again, we hear this all the time, but volatility creates opportunity. And I think we're in really well positioned that way. If you like volatility and you like Bitcoin and you want to see outsized returns, I feel like we're really well positioned for that.
Nice. And so going back to the medical business, from the article you did with Connor from Bitcoin News, I thought it came out great. You talked about the medical freedom, monetary freedom is sort of the slogan that you have for Semler. Can you talk about how you make that more than just words, but something that is operational for the company? Yeah,
it's interesting when you look at our medical business. It's pretty simple. We have this very simple device that tests people for vascular diseases, primarily peripheral artery disease. So it screens them. So a lot of people, I think half the people who have PAD, peripheral artery disease, don't know they have it. It's asymptomatic. So you need a screening device to determine, to find out who has it, because people with PAD have like a 3x chance of a stroke, a heart attack, amputation. There's huge medical costs involved in not detecting it early. So this simple device that my father, a cardiologist, created, 20 something years ago, it takes 3 or 4 minutes to determine whether you have PAD and can save a lot of costs and save lives. And we believe this device has saved hundreds of thousands of lives. It's called QuantaFlow, and it can be applied to other types of ailments in or vascular diseases. And we're waiting for the FDA to force approval for an application of the device to heart disease, so early detection of heart disease, which is a much bigger market than peripheral artery disease. And so we're hopeful that sometime in the future we'll get approval for that. It makes sense to me that this device already exists, it's being used. Why can't it be used for another application? But things are slow at the FDA, especially with Doge. So and then we have found we've talked a little bit about it on the last call that we have another product that we're developing that has had really nice green shoots, and we're excited about it. And any one of these products can be very big for us. I mean, the PAD was a very successful product. It's waning. We can talk about that, but in its heyday, it was generating $75-80 million of revenue at its peak, and had 90% contribution margin. So it was a massive cash cow. I think it generated in the mid-20s at one point in EBITDA, which was great. And our stock was valued at over $1 billion just on that one product. So it has, if we can replicate that with heart disease or this other area I mentioned, we're dealing with bigger TAMs actually than PAD. So it has potential, and so we're hopeful, but it just takes time. Healthcare and the area we're in is slow to move, and it's not like Bitcoin; it doesn't happen overnight.
Mm-hmm. Well, it sounds like possible more opportunities to get more cash flow to buy more Bitcoin, right?
Yeah.
And do the employees on the medical side of the business get Bitcoin at all? Have you done any education for the company in that regard?
Not the entire company, but they seem to be all in. I mean, it's been a value creation story for us. Like, our medical business has not done well, but our stock is up over 100% since we announced our Bitcoin Treasury strategy. So people are happy, and a lot of people in our company own stock. So that I think has big influence on how happy they are about our Bitcoin Treasury strategy. And our medical business has been frustrating in the last few months, and so we're just we're working through that. So I think that people are very happy that there's something really positive happening for us.
Yeah, and that's the best way to learn about Bitcoin, right? Have a little skin in the game, see the number go up, be interested, and then sparks your curiosity.
Exactly. Yeah.
Another thing I'll talk about is corporate custody, right? Saylor is very guarded as to where his Bitcoin is stored, right? Whereas Metaplanet, they have a website where you can see on-chain as part of the mempool sort of ecosystem where you can see the number go up over time. And I think that's a great marketing tool, right? Especially somebody who runs a large Twitter account. I can take a screenshot of that number go up in the stair-step graph and show, wow, Metaplanet on-chain, you can see their number go up. So tell us about your custody solutions if you're willing to talk about it, and would you be as open as Metaplanet to share that address?
We're totally open to transparency. I think first of all, I'm not sure. I believe we've disclosed who our custodians are, but we have two custodians. They're the typical people you would expect. And we're not, we're really excited about the opportunity to diversify our custodian base. Not that we don't like our custodians. They're great. It's just that I would like to see, the big money center banks get into this area and provide custody. I think that would be a really beneficial thing for Bitcoin Treasury, corporate Treasury strategy. It would be great. It would get a lot of other companies, I think, interested in doing this, because custody is a real issue, I think, in the space. I think that it's become such a big asset class that you need to have major banks involved in custody. But yeah, we're open. I love the strategy page. I love their website. We're planning to do the same thing. We're working on that right now. But that is something we would love to do. And we're totally interested in sharing as much as we can about Bitcoin. We're not looking to hide anything at all when it comes to Bitcoin. We want everybody to know as much as we possibly can tell them.
And so you are also a public advocate for Bitcoin now. You are an investor. You talk to CEOs, CFOs. On other interviews, you've said that you're still met with some hesitance when you bring up the Bitcoin word. And you were also just at Bitcoin Investor Week in New York City, talking in front of a room of lots of Wall Street bigwigs, right? So what is the general aura around Bitcoin right now in the corporate world? How are you being responded to when you bring up the Bitcoin word?
I would say it's gotten worse because of the drawdown we've seen more recently. I think people are kind of viewing it more as just another volatile tech asset that trades. It's been correlated to tech and this tech sell-off, and so I think it's kind of been put into this bucket, and it's not, people I think are kind of, saying, I told you so, right? You wanted me to put my cash in this, and I would have lost, 25% out of the gate, which is exactly what happened to Semler Scientific when we bought Bitcoin and the Mt. Gox news came out, like as soon as we finished buying it last year. So it just makes it harder, for people to get there mentally when they see this type of activity. I've been meeting with a lot of companies. There've been a lot of tech conferences recently, so I've been very active, and I've asked a lot about it. I was actually at a Tesla factory tour yesterday in Austin, and met with their investor relations team, and we talked about Tesla's Bitcoin holdings, and they don't really talk about it. They're not really interested in buying more Bitcoin. Seems like that's just not a priority for them, which is unfortunate. But I think they have so many initiatives that they think they're going to need their cash for it, even though Tesla has a ton of excess cash and generates a lot of cash. So it'd be great if Elon would, buy more Bitcoin. He's obviously was very smart about buying it the first time around. But most companies are kind of probably feeling like they made a smart decision if they were thinking about buying Bitcoin, a few months ago. But I think over time, that will change, and you'll see more larger companies with real huge amounts of cash buying Bitcoin. But it's just going to take longer probably because of this more recent episode. That's my guess.
Do you see any large catalysts coming down the line that might change their perception of Bitcoin? Is it just a matter of number go up and it being a $100,000, $200,000, $300,000 asset to make them interested, or does there need to be further regulatory changes or changes on the banking side?
Yeah, I think it's the custodian stuff we were talking about with the banks, and I think that could actually be a game changer. I just don't know how long it's going to take. A lot of people have different views on that. If it takes a few months, then that'd be great. Some people think it'll take much longer than that. I think the banks are going to get into this soon. I mean, it was a good sign that Morgan Stanley did Saylor's last, deal. They did his convert. And so I think that that's a sign that, big time banks are going to get into this, and that will be important. I think that, once you have that first company, hopefully it's somebody with a lot of cash that is pretty mainstream, probably in the tech sector. That could open the floodgates, but there aren't any real signs that I see of that happening anytime soon. If the United States buys Bitcoin or another country buys Bitcoin, that probably helps, but I'm not sure that matters either, because I think that this strategic Bitcoin reserve is viewed as a partisan effort. It's more of a Trump administration thing. It's not clear that it would have continuity post-Trump. And so it maybe if you're a corporation, a big one, you'd think, this is just kind of, it's a political thing. It's not really, it doesn't make sense really from a long-term strategic standpoint.
Mm-hmm. And then finally, in the Bitcoin section, your initiative this year, 2025, is identifying zombie companies, right, to invest in Bitcoin. You've pointed out Zoom is a good candidate. Coursera was number 2. So quickly just round up, what is a zombie company? What makes them good for a Bitcoin Treasury option? And who else is on your list?
Can't reveal any others yet, but I'm working on it. There are plenty. There's so many. I can't tell you. From following the stock markets, most of them are smaller. They're not. Most of the candidates are kind of in that multi-billion-dollar to and smaller range. There's a lot of $1 billion or less companies that have a lot of cash that are. It's a lot of their market cap is in cash and they're generating cash. But a zombie company is a company that has performed poorly for a long period of time in the stock market. It's a company that has a lot of net cash on their balance sheet, and it's a company that is making money, and it is a company that whose revenues aren't imploding. So you have, generally flat revenue growth or single digit revenue growth, or maybe a slightly negative revenue growth. But you have a company that's generating cash and has a lot of cash on their balance sheet, and their stock is going nowhere or just down. And they tend to be in kind of similar spaces. You see a lot, interestingly, in the online education space. You see them in in the staffing space, in headhunters. Zoom is a great example. I think Zoom is such a perfect example. Zoom is your perfect zombie. It's been just a crappy stock for so long, and it has a third of its market cap, maybe more now, in a third of its market cap in net cash. They have a 25 billion or less enterprise value and 8 billion of net cash roughly. They generate $1.5 billion of cash a quarter. I mean, they're making so much cash right now, and they're still growing. They're growing low, 2%. And they don't, and they're just, they're like a much bigger version of us. They're looking everywhere for acquisitions. They're trying to buy stuff. They're finding ways to blow their cash on businesses that they're not even in, just so they can find some way to grow. And they're stuck, and they're in a very competitive space now, obviously. But they have a great brand. Everyone knows Zoom, and people use them, and and they're not going away. So they have an amazing opportunity to buy Bitcoin. And what's also interesting about this particular type of zombie company, I actually think these are the best zombie companies, are the ones that are controlled by one person or two people. Zoom is controlled by through super voting stock by its founder, and he's a rocket scientist. The guy was has been on the forefront of AI, and he single-handedly could decide to do this on his own and take the board with him. And he has a board of people that are, very close to him. So he has the power to do this really by himself. And he's a very forward thinking guy. So, to that extent, he should see the merit in Bitcoin and the upside in Bitcoin at least. And I think, there's a decent chance a company like that someday will be on the Bitcoin standard.
Yeah. And then so I think it would be really important if a company like Zoom, that's a household name, right? Or GameStop is another one that just, if they were to really dip their toes in and make it's not weird anymore, right? It's not just
GameStop would be great, except they're not making money, right? So they're not ideal, but it would still be great to have GameStop do this. Zoom is the ideal candidate.
Nice. And so now just zooming out a little bit, you've said you're not a macro investor, but you still are in the markets and you're looking at stocks every single day. I mean, it's been quite the change up from under the Biden administration. It was Goldilocks zone, right? And now we're in this new tumultuous era under Trump and trade wars and tariffs. What are you seeing? Do you think that we're just front loading the bitter medicine and we're going to have brighter shoots down the road, or are we in this new era?
It's a great question. You cannot, you have to be a macro investor, even if you're a stock picker these days. You can't avoid it. The market has become so macro driven. I don't know. I think that tariffs are, some people view them as like a nuclear bomb about to hit the market next week. That's scary, and this is kind of uncharted territory. I know we've toyed with tariffs in the first Trump administration, but this is a different level. And it seems like they're very serious and sincere about their intentions to do this. I think at first people assumed that this was just kind of a bluff or a negotiating tactic. I think it's become more than that. I think it's become much more of a firmer type of policy initiative for the Trump administration. So it's going to be difficult. There are so many charts going around, people looking at the implications of this and the impact it's going to have. So it's really hard to know the degree to which it's really going to negatively impact stock market. And I think that regardless, there's been some real damage done to consumer confidence and to corporate confidence, and so we're seeing that in the surveys. And I think that's what's painful right now. And it's already, we've had a huge drawdown in a lot of stocks, and in the market itself, we've had a correction, and that's typical when you have these types of macro scares, growth scares. It's basically a growth scare. And so there's a lot of hesitancy. There's a lot of uncertainty. How much of that is priced in? I don't think it's fully priced in. I think if this continues and we really implement these tariffs, and then these tariff wars escalate, then I think you do have more downside. I think that it's really hard to pick individual stocks in those situations because everything gets correlated and goes down. And so you have to be really careful. But the tricky part here is that the president can change his mind, or could soften, or give his tariff make the tariffs more of a negotiating process, and that will to buy time, and maybe there's a compromise, and then you would have a great setup. The market would go up a ton. The market is pretty well coiled for a rally. Like if there was some really durable, significant positive news, the market has the potential to go up a lot. And there's just tremendous pressure right now. There's a lot. You're seeing a huge amount of shorting and bearishness in the market. And you see that in the how many stocks have gone down and the huge drawdowns in major stocks. So it's set up for a really great rally if the rhetoric and the tariff stuff can kind of be compromised or softened a little bit. It won't take a lot, but we need a reprieve if the market's going to perform. And just as an aside on Bitcoin, fundamentally, theoretically, I feel like Bitcoin should not have to be, again, like swept up in this correlation of negativity, because it should be a safe haven. But I understand, why it doesn't act that way, and why gold has, continued to just hit new highs. And at some point, we need Bitcoin to do that. We need Bitcoin to act like gold. It will at some point, but it would be nice to see it, go down that path soon.
It will. I think I think there's going to be a phase shift with Bitcoin, where one day it's just looked at completely different as it was from all of its history in the past, right?
Yeah.
And who knows what that catalyst will be, but it seems as if we're priming for that with all the shakeups that's happening around the world.
I agree.
Well, thank you very much for taking the time. If viewers want to find out more about you or Semler Scientific, where should they go?
You know what? You can find me on X. It's probably a great way to do it. Or, ask to do an interview. I'll be happy to do it.
Cheers, Eric. All right. Well, thank you very much.
Okay.
Appreciate your time.
Appreciate the questions. Take care. Thanks. Bye.